Okay. All right. Welcome to the live of actually the Fed's, the Fed's announcement. We're gonna be able to just, check it out in terms of the market, go on a live news and be able to see, what's going on in a live news. And right now it's 13:48 in South African time. I think the Fed is gonna start announcement at 2 p.m. all the way to I think half past two, because after 2 o'clock where there's announcement, they're gonna have also the Fed's meeting. So I would like to go to show you guys, or whoever who's gonna participate, when it comes to those conferences. If you do have any questions, you can pop up with questions on the chat. You can also comment or say anything that you would like to share. All right. Let me see. Okay. Okay. Let's see if we can be able to get to where we Windows. What do we have on Windows? Oh, okay. Okay. All right. Looks like the MTF4 has disappeared. Just get to MTF4. Trust me, this is going to be very, very interesting fades today regarding, because of, okay, we can see the MT4 checking out on the markets right now. USDT, you can see it sitting at 41,668. This is where I'm anticipating that, the way they're saying, in terms of 50 basis points and or in terms of 100 basis points. So I'm really, really anticipating, to actually maybe Dow Jones to push the price a little bit down. So here's what I'm thinking. I think the market is going to go to 40,738. If it breaks that level, it might get to, this is the key point, to 40,000 flat. I think it's a little bit of reverse when it comes to USDT. When it comes to NASDAQ, I'm thinking a different way, because of, I think it will want to get to 19,000. In fact, on a daily time frame, I actually analyze that I think the market of, in terms of NASDAQ, NASDAQ, it will get to 20,000. So for now, let's just check it out, NASDAQ at the moment. Okay, just quick analysis. We saw NASDAQ is going to go up a little bit. Just go maybe to 20,000 mark, maybe to reverse again back for this week. S&P 500, I think it's a drop. It will drop. I think it might get to maybe this should be your first target, 5,533, but the highest target, I think it's 5,414. Gold, of course, I think gold, it will drop a little bit, pushes the price. Maybe this one should put it as a first target, and then we'll see. In fact, no, this is supposed to be a first target. Come on, come on, come on, come on. Bloody gods. All right, 2,520 or 2,500 straight. I think I'm anticipating on that. Euro USD, I've already said that, it's dropping right now, but I think it will pick up and to start going all the way up because of, I'm anticipating a dollar to gain a little bit of momentum. So it might go back to 1.11. No, sorry about that. If I'm anticipating a dollar to have a stability, I think Euro USD, it will push the price down. This is the first TP we can anticipate it. And the second TP we can be able to anticipate. Okay, so we're going to leave it like that. And then let's just get to go check it out, how the news, what the analysts are saying at the moment, couple of news channels, and then it will get to 2 o'clock. There's a 6 minutes left in terms of, a Federal Reserve announcement. So welcome. Happy Federal Reserve Day, that we are actually anticipating to see today what will happen. Okay.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight.
Transform your home into a beautiful and unique space filled with character, texture, and...
It's going to give us...
And that has to manifest itself into at least ceasing the rally
with the
in the back end and even maybe pushing rates higher.
This is why I was interested.
Rates seem fully valued to us. And the way we're really thinking about it is in order for fixed income to realize what the forwards are, to justify the current back end, you have to see rate cuts come through the system and come through probably even faster than what's being priced in the front end.
I would think that actually if the Fed were to disappoint and only cut by 25 basis points, people would buy the back end aggressively. And vice versa, if they cut by 50 basis points, it actually increases the chance of inflation picking up more at the other end. Greg, why is that not the trade?
Well, that could be the trade too. I mean, that is a plausible scenario, right? And kind of the debate that we're having just highlights what a tricky environment we're investing around, and the tricky environment that the Fed is contending with. So it's normally much more straightforward. It's less straightforward today. So I have a lot of sympathy for your arguments. I just really think it's an open road here.
Agreed. Greg, thank you, sir. Appreciate the clarity, or the lack thereof, the honesty. Greg Peters of PGIM. Thank you, sir. Appreciate it. Long end of the curve. I have this debate in my own mind. The investor committee in my own head, sort of throwing things at each other and trying to work out how this works out today.
The life of Pharaoh. It's sort of a very aggressive and intense life. There is this point, though, which is if you see a Fed that's more aggressive in terms of cutting more aggressively, doesn't that lead to the inflation potentially creeping higher and inflation expectations over the long term, or is that irrelevant at this point?
I think the bias in this market right now is the Fed needs to cut because the labor market might be in trouble and they need to get ahead of it. I think that's the bias right now in fixed income for the people that we speak to on any given day.
Mike writes in. Mike, thank you. How about the Fed just does 0.375 basis points and pleases everyone?
I've got a similar message.
Yeah, split the baby. Yeah. I think that, why not go out there, say, look, we hear everyone. We're not sure. So we're going to cut by 0.41% to bias it a little bit more.
I'm not sure that's how it works on a committee today, but then again, who knows?
they could just track work, on the Bloomberg terminal and see where the projection is and just track that.
I've got some good news for you. It's almost over. We get the decision at 2 p.m., the news conference at 2:30. And then after that, at 3:30, we can sort of lick our wounds and work out what happened, right?
Everything will be the opposite of what we expected. There'll be disappointment, though.
Up next, Dan Suzuki of Richard Bernstein, Yelena Shuletieva of BNP Paribas, Earl Davis of BMO, and David Rubenstein of the Carlyle Group from New York. This is Bloomberg.
Federal Reserve.
One of the institutions you've been very philanthropic with is your alma mater, Harvard. But recently, you've been very public about your criticism of the way Harvard handled the events of October 7th and their aftermath. Could you talk about that now?
The first reaction of a group of 34 Harvard student clubs on the morning after October 7th was to put out a statement saying that Israel was 100% responsible for the acts of Hamas. And my view on that was
really setting up
ridiculous.
Himself,
You can come out and say, look, I'm very unhappy about Israel's how the treatment of Palestinians in the West Bank, or you can say, we can talk about Gaza Strip, but you can't support terrorists, and particularly terrorists that rape and pillage and murder and burn and take hostages. Well, I got actually a text from a CEO in my industry. He's like, Bill, the people at Harvard, I'd like to know who the students are behind these clubs so I make sure I don't inadvertently hire them. And so I tweeted out that sort of made that point, and caused a bit of a firestorm, and I got a lot of pushback. Picking on students. I said, look, you can't hide behind a corporate entity if you're going to support terrorism.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Changes everything.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics.
There's other instruments like UK 100.
More recently, we've discovered that we can reprogram your cells. We can edit the genome. We can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage. And what we're going to find is they're going to open up whole new areas of growth from a business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. It's a multi-trip.
S&P 500. Again, already showed this.
Lower interest rates, which the Fed is going to deliver. The question is how much.
We're looking for a 25 basis point rate cut, but for them to really signal they're going to do a sequence of cuts here.
A lot of the people on the street that have 25 basis point rate cut calls, they'd have no problem with the Fed going 50 either.
There's a really good chance that they move 50 simply to front load the process.
We do need to be cautious of being too dovish because we're coming off some pretty significant speculation, but it's still not released from the market yet.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's see how it's going to go.
Got a message moments ago, just flip a coin. Is that what they're doing on the committee right now? Flipping coins?
I think basically everyone is as sick of this discussion right now, but we're going to have it. Is it 25 or 50? We want to know. Voting minds want to know. We'll find out today at 2 p.m.
We've said a million times it's a three-part act. You get a statement, some forecast, and then you get the news conference. It's the package that really matters, whether it's 25 or 50. What comes with it? That decision a little bit later on this afternoon. In anticipation, your equity market very close to all-time highs on the S&P 500 this morning, up by 0.3%. 0.05% on the S&P. Lisa on the NASDAQ, up by 0.1.
The question of just how this market can actually get further boosted by rate cutting expectations after 240 basis points of rate cuts already have been baked into the market through the end of next year. Does Fed Chair Jay Powell outdove the markets at a time where the stakes are pretty high? The key question will be what the threshold of data will be that they look at. Are they still data dependent? And what data are they looking at to justify a move that a lot of economists are saying, really? I mean, it's still looking okay.
When it comes to market expectation, Greg Peters, 25 more disappointing than 50. If they cut 25, what does Powell need to say to assure potentially those disappointed market participants?
This one's in the weeds, and it's for the bond investors, but the conversation we just had with Greg Peters of PGIM was an important one about the long end of the curve. If the Fed does not validate market pricing today, comes out with 25 and doesn't commit about getting back to 3% anytime soon in a timely manner, and we get that disappointment, so-called disappointment, do we get a rally at the long end because we start to price in a policy error? Or do we get a sell-off because we're pricing out rate cuts after pricing them in so much over the last few months? What do we get?
We have no clue. And I think when I was listening to his response, which was actually refreshingly honest, which is you can present a fantastic logical argument one way or another.
Maybe just check it out the market at the moment and see where we're standing. And if everything that we are talking about predicting, it's going to come correct. Okay, cool. Now we can see US data is the way we're anticipating the volatility. It's starting to show a little bit of turning back, but let's see. This is another position just to be a safe side in terms of the take profit. These are spaces where you can put your take profit there and, you know, collecting all the pips if it has to push the price down. 41,000 all the way to 41,176. But of course, the biggest highest target that we are anticipating is the 40,070 or 40,000 flat. That's 100 again, same thing. Starting a little bit of movement. Okay. German 30, Euro USD, we really are hoping it might push. But again, as the analysts are saying that, you know, the market, it's still on hold. The market is still on pause, still waiting for that special announcement to go live. Quite some trade, man, that will happen, you know. Drinking juice. It's hot in Johannesburg. There's a little bit of sun. I don't know what's going on, but yeah, it is what it is. Let's try to check other type of a channel, okay, to see what exactly it's saying. We can see that Bloomberg is not live yet in terms of the Fed.
of interest rate cuts. And that'll be one of the key things to watch today.
This is Yahoo
what
Finance.
the Fed says about going forward for the rest of the year.
Let's also talk about the housing market too, because that's just been a huge kind of issue throughout this entire rate hiking cycle. Mortgage rates have already started to come down a little bit in anticipation of rate cuts, but while lower mortgage rates do make buying a house more affordable, you have to remember too that the whole reason that the Fed is cutting rates is because the economy has been slowing. So it has really clogged up the housing market. So hopefully more supply will be freed up, because so many homeowners have just been putting off selling their houses, because if you sell, you got to buy a new one. And then you have to go through that whole process of taking out a mortgage at this sky high rate. But there's also some home buyers will probably be waiting for rates to get even lower. So maybe it won't put all the supply on the market like people are hoping, because if we know the Fed is going to start this rate cutting cycle. So if you say like, maybe if I just hold out a few more months, I can get an even lower rate. So you're not necessarily going to see this massive supply free up, but you will see a little.
And in general, the economy's response to an interest rate cut takes a long time to show up. And that's why the Fed usually does 25. It's because let's do the standard one and then see how it plays out, and we can adjust from there. That's why a 50 basis point cut is seen as a very aggressive maneuver. So 25 is, standard. Let's see how it plays out. Milton Friedman, the famous economist, called changes in Fed policy a water tap that you turn on now and that then only starts to run 6, 9, 12, 16 months from now. So this is, like I said, this is the start of a long journey, but it could lead potentially to a soft landing where you bring inflation down and you don't send the economy into a recession, which is so hard to do given all of the crazy variables and different forces at play in the U.S. economy.
Let me hear it, Neil. All right. 25 or 50?
I think we're going 50.
You're going 50.
I think we're going 50 because I think the Fed wants to minimize risk, and I think they are more concerned with the labor market tanking than inflation ticking back up.
If you were a teenager when Instagram was first becoming popular, the biggest issues you face were whether to use the Valencia filter or X Pro 2. But Instagram has turned into a more dangerous platform for young people in the years since, a fact that Instagram itself is finally addressing head on. Yesterday, the app announced new changes that will designate all new and existing accounts set up by users under 18 as teen accounts and automatically make them private. The drastic moves comes in response to years-long pushback from parents and advocates who said their kids were receiving age-inappropriate content and were exposed to child predators. Some of the new features included in the update are restricted DMs that limit the people who can message teens, and a sleep mode that silences notifications between 10 p.m. and 7 a.m. The app will also restrict who can tag you in photos or mention you in comments if you are under 18. Neil, turning the default account setting to private is a start, as are these other features it's layering on. Do you think Instagram is making good strides towards protecting their youngest users?
I think that this is one of the biggest safety moves for children that any social media company has done, and Meta is not necessarily making them voluntarily. There's immense pressure on Instagram across a lot of social media companies, but Instagram in particular, because these whistleblowers have come out who have worked there saying that Mark Zuckerberg, the CEO, and other higher ups at the company knew that Instagram was harming specific populations of teens, and they did not do anything about it. There have been multiple lawsuits filed by attorneys general all over the country. Mark Zuckerberg was hauled into Congress, and in this dramatic episode, he apologized to the parents of teens who were harmed by social media. And I think the fact that they're doing it because that is really critical, because it's not good for their business, because they're in a really tight race and competition with TikTok and Snapchat for the next generation of users, and doing these policies which may not sit well with teens to make them private by default probably will make some of these teens look to other platforms. And Adam Mosseri, the head of Instagram, acknowledged that it would be bad for engagement and user retention in that 13 to 17-year-old demographic. But I think it's just emblematic of the pressure they're facing.
The question that immediately came to mind for a lot of people is, how can you enforce basis, can't you just lie about your age when signing up? And Instagram is kind of boosting up its safeguards around that.
I don't know what's going
People
on
who
again
attempt to change their age from under 18 to over 18 already have to, one, record a selfie, upload their ID, and then also have another user vouch for their age. They have these safeguards built in already, but then they're also saying, hey, we can take things a step further. They're going to use AI, of course, to scan for maybe signals that you are not the age that you say you are. One example that it cited was that if you say you're over 18, but then someone comes on your picture and says, happy 14th.
The Federal Reserve decisions today. We're still waiting the announcement. We're still steady, still to see what is to the announcement.
Bit of a stretch.
What are you advocating for? Can you afford not to own names like NVIDIA? These big AI themes with real money coming off the other side.
Well, I think, it really depends on your time
now
horizon.
It looks like the volatility has started.
These
you can see
environments
NAS 100 have a little bit of movement.
Driven by momentum and sentiment. Until you see liquidity roll over, or until you go into some sort of major slowdown, which again, I don't think is happening, there's no reason to expect that they're going to crash, right? So if you want to own some of them, I think that's reasonable, but I don't think you put all your eggs in that basket in a world where this is the most concentrated, most expensive market that you've seen in a long time. That is a market that begs for diversification in your portfolio. And you're not going to do that by going to buy more NVIDIA.
Well, some people have just gone and bought more utilities. Yeah. Can we finish on utilities? It's a sector we keep coming back to on this program. It's up by more than 20%. Yeah, today it's had a massive run. What is this trade? What is it to you?
Well, I think you have to remember, it's up by more than 20% because it got completely demolished in the prior 6 months. And I think a lot of that was, some regulatory concerns around pricing and whatnot. I think when you step back from it, people have to realize that utilities and the rest of the defensive sectors are one of the best performing sectors of all time. When you go back over a long period of time, they have some of the most competitive and best returns. So if you get a point where sentiment goes away from them, which they typically do during most of the bull market where they're lagging, that is where you want to build position. And so if you start to worry about the economy here and growth, the more you should be thinking about adding utilities to your portfolio.
Guys, how the chart is looking and how the Nasdaq is performing at the moment. NAS 100. As you can see, price really getting into the volatility that we were looking for. When I think of, let's check it out, the USD not really has started yet, but we can see this level has been broken. Once this level is broken, again, we can clearly, give it a take profit on this side. I mean, it depends how much are you trading with, but here it is, another candlestick dropping in, bringing a little bit of more volatility soon when the announcement has started. I think right now it's just they're arranging themselves for the press conference. S&P 500 the same. Here it is. So these are the levels that I think the volatility will come. 5,600 when it comes to S&P 500. The other thing when it comes to S&P 500 has been the most talked instrument for 2024. It's one of the instruments that has been breaking the levels, all the time, breaking the level, going up, breaking the level. If you look at it, we go maybe weekly time frame. Look at it. S&P 500, it was sitting at 4,948. That was the 17 March 2024. From 17 March 2024, it's been actually bullish all the way up, all the way up. These are all-time highs. Breaks here, form all-time high, form all-time high, form all-time high, all-time high. So S&P 500 has been the most talked instrument, when it comes to global financial market, when it comes to forex market and a global financial market. We are in 30 minutes in. Let's look at gold. Gold, couple of places where you can actually put as a take profit. Depends with the lot size that you are actually trading with. But trust me, the market it will reverse if the dollar gain the momentum, if the dollar get power because of the cut of the interest rate. So I'm anticipating a little bit of drop. Pushes the price 2,566 all the way. But these are small, movement. But trust me, if you actually put a good money in a good volume for it and very proper risk management, it will drop. Let's hear what this.
All of a sudden, people started to talk about 50 basis point reductions at the Federal Reserve. Should we still be talking about 50 basis point reductions at the Federal Reserve, given the jobless claims are back to 230? So we did a big round trip in the market, get to the back end of August and had a speech in Jackson Hole from the chairman, the Fed chair. This is what he had to say in late August. We do not seek or welcome further cooling in labour market conditions. Started to sound like, to some of you at least, 50 basis point rate cut might be on the cards for September 18th. So we waited for the jobs report. That would settle this whole debate. It didn't. And we waited for a retail sales report that would settle this whole debate. It didn't. So we're still here. Coin toss. Finally balanced between 25 and 50, we're told repeatedly. I think the big takeaway from me from the Fed speak over the last month is not that they told us they would cut by 50 basis points, is they didn't come out and say they wouldn't. And that didn't put this story to bed, because here it still is alive and well going into this afternoon.
But really, the market has pushed the 50 basis
He didn't
points
talk
because
about a
we can see
methodical
the
cutting
banks
cycle.
already
He
have
didn't talk
started
about
to cut
going slow.
the
He didn't
interest
talk
rate
about
with
all
the
of the
50
things
basis points.
that people
European
were
Central Bank have been
expecting him to
cutting
say
for over
to signal that they were going to go 25
now,
basis
25
points.
and 25,
Key
and they're
aspect to
sitting
me of
at
this whole
50.
situation
That's
is the
what we're
fact that a lot of
anticipating about the
behemoth
market.
investors and thinkers really disagree. The fact that you have Jeff Gundlach saying we're probably already in a recession and 50 absolutely should be the right call. You're hearing that from Neil Dutta as well, not the recession part, but the 50 basis points. Also from Bill Dudley, Ray Dalio saying the right thing is 25. Most economists saying the right thing is 25, because when you look at the economic data from retail sales to home mortgage applications, it doesn't look so bad.
The 25 versus 50, I think we need to park. Tantazuki was just on from Richard Bernstein. He made the point that's not the important part of the story. It's the other 200 that's priced that is. Why do we have this confidence that it's a one-way trip back to 3% from here, regardless of whether it's 25 or 50? Where does that come from? And how different is that to what we hear from other central banks, including the ECB?
Let's go to the Fed's basement. Torsten Slok was talking about
John Williams
shaking up. John Williams is there with R-Star. I want to talk about something else that's there, this long and variable lag tag that's sticking out of the corner of one of the old bicycles in the corner. There is a feeling that there are long and variable lags, and that the 5.25% to 5.5% of rate hikes really still have to trickle into the economy, and we'll see some of that pain come through early next year. There is that belief that it's out there and that it will be a long and variable lag for the other side, for the rate cuts to really start to affect the economy in a material way. That's what I would really chalk that up to.
Market participants, investors, traders will tell you this is a very, very finely balanced decision. That decision at 2 p.m. Eastern time Even more interesting, given the fact we're near all-time highs on the S&P 500. Equity futures just about positive on the S&P, on the Nasdaq up by 0.06%. If you switch up the board with equities close to all-time highs, we've got bond yields near the lows of the year. Just off them as yields start to push higher in yesterday's session, and we continue that trend this morning, up 2 basis points on a 2-year, 362.34, up 3 on a 10-year to 367.93. That's the price action. Let's get you some morning calls. First up, William Blair initiating coverage on NVIDIA with an outperform rating, highlighting the company's leadership positioning within gaming and artificial intelligence. Your second call from Guggenheim, upgrading SiriusXM holdings to buy, pointing to strengthening subscriber trends and stabilizing free cash flow. Their stock is up by more than 2%. And finally, Barclays upgrading VF Corp to overweight, the analyst seeing significant improvements under the retailer's new CEO. Their stock is up by a little more than 3%. Let's stick with the consumer. August retail sales getting a boost from e-commerce, signaling resilient household demand. But the report doing little to help settle the debate over the magnitude of today's expected rate cut. Joining us now is Poonam Goel, Bloomberg Intelligence Senior Analyst for US Retailing. Poonam, I'm not going to ask you whether it's 25 or 50. I'm not going to torture you with that. I want your read on where retail is and where the US consumer is currently.
The consumer is making choices, and they're clearly making the choice to shop online, is what we saw in the retail sales figure. I think, look, the consumer still wants value. They're looking for value. They are strapped, but they're willing to spend. They're traveling a little less, which are big ticket expenses, so they can afford to buy more things. And that's really what we've been seeing over the last few months.
But I'm laughing because the idea that we're talking about retail sales and the only reason why people cared about retail sales was 25 or 50 basis points is just hilarious to me. Because ultimately, it's talking about the strength of the consumer. We're talking about whether people actually have the ability to keep going out and buying. And we actually saw a decline in grocery store sales. And I'm just wondering, what was the actual takeaway other than 25 to 50 basis points? Is this a consumer that's accelerating? Is it one that's holding in there? Or were there signs of true weakness under the hood?
I think it's definitely not a sign that the consumer is accelerating. We are hearing from everyone that we talked to, the consumer is making choices. So clearly, I'll go back to, last year and the year before after the pandemic, you were spending.
We are getting cost. It's 14.25. Market still stable. Not doing anything at the moment. Nasdaq showing the recovery. Is it going to go to 19,000, 20,000 the way we were talking about, the way we anticipated? Okay, 100 is our FTSE 100. So it's that we're anticipating a growth. France 40 and as well as UK 100 was maybe a little bit of bullish that will take the market to this level. In 4 minutes' time, Mr. Gold. That's create a nice move there when it comes to gold. I'm not gonna lie, I won't lie. Damn. Can be these days what's going on with Instagram. I can't go live on this. See, these are stuff that Google doesn't want all these guys to be advertising on a Google, because these guys, they just change whatever that they want, put a different features, and they know if they put a different features, if you want the other features, that means you have to pay. You have to pay. Imagine on that. Uh, 2 minutes into. Look at gold, what it's doing, man. A minute to half past, but look what God it's already been starting to actually, do. Man, money is about to be made here, man. The story still remain the same. Is it going to be a 25 basis points or a 50 basis points? So the marketers, they're actually targeting on the 50 basis points. It will be better because most of the stocks, they will start to bullish. They can be able to participate and make something out of the bullish movement. Again, the stock owners as well. I mean, you don't want your stock to lose the price from the stock market. You want to keep your stock really, really stable so that you can make a profit from whoever want to participate or invest in your stock, right? So it's really, really interesting. But we can see gold. It's actually pushing the price down. NAS 100 picking up a little bit. Anticipating NAS maybe to get to this or to 20,000. How do you do these things? Do you have to? No. Okay. So we are actually still await. It's 14:30, waiting for the interest rate cuts from Federal Reserve. The market has still remained without knowing between 25 basis points to 50 basis points. We are looking at the market. We live on YouTube right now at the daily money market. If you're checking from Instagram, we actually live on YouTube. Okay. All right. So again, that's 100. We can see picking up. We just wanting to break it here. Once breaks this zone, we know we are looking for 19,000. But my really, really highest when it comes to anticipation, it's 20,000. So it's not just 19, it's 20, right? All right, so we still remain in terms of the interest rate Fed's cuts. We don't know between the 25 basis points or 50 basis points is going to be cut today. But of course, most of the traders and economists, they're actually thinking of 50 basis points because of, maybe just to give a reference, of the European Central Bank has been cutting 2 times, 25 and 25. They're already on, on 50. So US as well maybe want to follow as a halfway quarter trade.
It looks like this. Just
The market is really steady. Anything about this, not even before the announcement. So the market is really stuck at one position. So okay, keep watching where the market is going to go. Right, France 40 still remaining the same. UK 100 still remaining the same. German 30 still remaining the same. How many minutes we've been doing this? Let's just check it out because we don't want to go above a lot of minutes. At least we should be, something that people can be able to watch again. Okay, let's go.
And the forecast, Mike McKee down in Washington, to give you a little bit of a preview. Michael McKee, before we talk about 2 p.m., the decision, before we talk about 2:30, the news conference, and all the central bank decisions that follow, can you share with us what you saw in the mortgage application data this morning that tells you it's important?
Well, what we didn't see is a continuation. This was a change, a big change in mortgage applications. And we have just had, in the last few minutes, housing starts come out, up 9.6%. They fell almost 7% the month prior, and the expectation was for about a 6% rebound. So housing starts way up and building permits way up 4.9%. All of this seems to suggest that maybe if the Fed cuts interest rates, and we've already seen the markets price some of that in and mortgage markets pick that up, that you could unlock something here. Past 2 quarters,
housing
residential investment has been a drag on GDP. Maybe that turns around.
Mike, there's this question about whether the market's running away with itself in terms of yet another narrative. We started talking about the tick up in mortgage applications as well as housing starts. It can seem like a reacceleration, but from what? Can we put some perspective on this just to give a sense of how stagnant, how broken this market has actually been and how much of a game this actually is?
Well, real estate, as I mentioned, has been a drag in recent quarters on the GDP, and the real estate market has been all but frozen because people don't want to move. They don't want to trade in their lower mortgages for higher mortgages. Something like 60% of people have mortgages below 5%. So the fact that mortgages are starting to come down, mortgage rates starting to come down, lures more people into the market,
which
has been should
sticky,
create more activity. Now, does that mean prices go up because there's more demand, or does it mean supply outpaces prices and we see prices stabilize? Either way, it's good news for housing, and housing is a big part of the overall economy.
Could be a big part of the conversation today on the FOMC as well. Mike, can you walk us through what I don't think many people understand, the inside inner workings of a Federal Reserve meeting across 2 days, the build up to it and the actual process, what things typically look like and how different this meeting might have been?
Well, normally the committee members go into a meeting already having talked among themselves quite regularly, and Jay Powell touches base with all of them the week prior, so he has a pretty good idea of where everyone is, which is why the news stories last week were so interesting, that the Fed seemed to be letting people know that you shouldn't discount the 50 basis point move possibility. On Tuesday, they come in and they get their presentations on the markets. They get their presentations on what's happening in the economy from staff. And they talk about any special issues that might be out there. We are on watch to see if they're going to do anything about the balance sheet and QT at this meeting. And then on Wednesday morning, they come in and each one speaks, they present their views, and then they vote. And the question now is, does Jay Powell have something going here? Did he want a 50 basis point cut? Did he leak that to the newspapers so the markets would be prepared if that happens? And can he convince people to do it? So that's going to be, this is one of the most interesting meetings in a very long time. I looked it up. It was September of 2016, 2015 rather, the last time we did not know going into a meeting what the policy decision was going to be.
Amazing. Remember it well. Mike McKee, thank you, sir. Appreciate it. With us around the table, Yelena Shuretseva of BNP Paribas. Yelena, good morning.
Good morning.
Now, I don't want to kick off with conspiracy theories, but I'm going to kick off with a conspiracy theory. Mike touched on it. There was a theory out there on Wall Street.
This is the deal of today. Market. See where the market, if it's allowing what we said, what we predicted, or it's going against our prediction. So still, US data, not that much of movement. NAS 100, you can still, really, really strong candlestick, forming here. And look at this push. Once it breaks here, we are anticipating a NAS 100 to get to 20,000. That's my anticipation, 20,000. But of course, it might be maybe on a 19,500, 19,600 somewhere. But 20, it's my dream, to be honest. Right? Okay, it actually getting into a breaking zone of where we were thinking. Let's go, Nasdaq. Let's go, Nas. Let's go, Nasdaq. What is this? Oh, S&P 500. Nasdaq still the same. Let's go, man. France Forte, Cox, COC, we're already anticipating to these targets. Breaks already now. Going all the way up. This is the only interesting part when it comes to, trading the Federal Reserve. You can actually download money live, German 30, not really much about the move. Let's check it out on gold. It drops, but we're seeing a pullback, a little bit of pullback. This pullback, but again, you can see it breaks this zone. It might be looking to this. Maybe this is just a retest, pullback, retesting another position, or taking out people that they don't believe that gold it might, perish. We haven't seen Bitcoin in a while as well. We'll see what Federal Reserve is going to do to Bitcoin. But the way it shows, looks like because of it's one of the safe haven, against the dollar, like also gold. So I might anticipating a little bit of drop to maybe 57,600. 57,600 per Bitcoin. But look where it's coming from, 61,000. We've been predicting the bullish movement of Bitcoin, even when it was on 57. We actually thought it's gonna go all the way to 65. That was my prediction, that it might go all the way to 65 when it comes to Bitcoin. But right now, I think it might be push maybe to get to this level a little bit. All right, guys, keep checking the link. I think we actually over the time, it's over 50 minutes. I think just come back in minutes immediately when the fades actually start. So keep locked in on that. I just want to cut and restart again the live session.